Hello everyone, this is a continuation video of the 50% reversals that we discussed about last time. So we are going to talk about three important things in this video. The first one is going to be about the 50% reversals because yes, every now and then we have been seeing this 50% reversals coming down, right? So for example, let's say if you check on this 0 to 1, this is a 50% reversal. From this point to this point, again a 50% reversals. So this 50% keeps on happening every now and then. And in the previous video, one of the videos that we have made, somewhere around 9th of November, we did say that the market would be going to a high of 18,888, and from there it would be again reversing back to this point, that is 17,817. So you can always go back to those videos, check the details which are there in given into that part, right, and come back to us. So this is the first part that we are going to talk about. We are also going to talk about second part is there was a 90-day cycle. If we start from this, that is 1st of July, a vertical line drawn over here, to this date, which was there on 30th of September. Yes, we had a 90-day cycle which was been running. The 90-day cycle has been marked from this date to this date. Yes, so this is a 90-day cycle which was already happened, right? This is especially into Nifty. And third details we are going to talk about is a current cycle which has been there existing. So today is 12th of January. Before 2 days, we already made a Hindi video, and in this, we already discussed about that. So let's say, for example, there is a current cycle which has been running as per the Gann emblem or squaring of time and price. So we'll also talk about that. So before going to any further points, let's talk about the 50% reversals, what they are, how they keep on happening, right? So that's why we have specially mentioned about those things. Now, what basically happens is, yes, there are 50% reversals which have been happening in the market, right? So if you look on the smaller time frame, yes, you'll be finding about that 50% reversals also. It is not that you'll be able to get them into the bigger time frames only. Yes. So let's say, for example, you know that this is the first cycle which has been formed. Say, assuming we'll just talk about this part, right? Yeah, better. Good. So if I start from this low, which is there on somewhere around 17th of July. So 17th of July, there was a low. 20th of July, sorry, it is 17th of June in Nifty. Yes, there was a low. From that low, we got a high. And from there, we again got a 50% reversal. If you check on this Fibonacci, probably just focusing on this part. So there was a low, there was a high. Yes, we got a reversal which was exactly at the 0.5%, right? That was there. And from there, again, the market did go up. Yes, and again, it reversed probably from this point to a high and then form again a reversal, which was there talking exactly about 50% part. So from this low, which we have marked 0 over here to a high over here, and then again we see a 50% reversals, right? So this is practically been happening into the cycles part, right? So if this has been happening, how this has been happening? Whether WD Gann has given or mentioned it somewhere. So let's go to the reference part so that we are able to check down the theory. This was the practical part, but let's go to the theory also, right? So for theory part, yes, we have two books in which this the reference has been given. The first book is the WD Gann Master Commodities course, right? This is the first part where the details have been given. There is second book which is there, that is by the name of 45 Years in Wall Street. This is again by WD Gann, which is there, right? So in this book, two books, details have been given by WD Gann about his rules and how the cycles have been formed, right? But before that, let's try to go on one important thing which I'll try to emphasize in front of you. This is there from Tunnel Through the Air. So this book is The Tunnel Through the Air. We'll go on page number 75, which is chapter number 7, right? So there are certain things which have been given over here. We'll just try to focus them, right? So this is chapter number 7, page number 75, and this talks about the future cycles. So every now and then he has been trying to focus on something important which is there. That is in order to know and predict the future of anything, you only have to look up what has happened in the past and get a correct base or starting point. So he's again trying to focus on something which is very important, the starting point, right? Start points have been very important for us in the market, right? He's been talking about cycles, past history. We need to check that, try to see what has been happening. Again, he's talking about if you have the correct starting point. So he's talking about 100-year cycle, 1000-year cycle. But yes, in that you need to know the start point, because if you know the start point, there are something very important thing that you'll be able to judge and know across, right? So what is that? Yes, this is over here. How do I forecast future cycles? You may ask. In order to forecast future cycles, the most important thing is to begin right. For if we have the right beginning, we will get the right ending. So see the wordings which are there. The most important thing is to begin right. So if you have a right beginning, you will be able to get the right point, right? And you will be able to get the right ending also. So it is the crux of WD Gann is to find out cycles. There is a start point in the cycles, there is an end point in the cycle. So if you are able to identify the start point, definitely you will be able to go to the end point. Now it's not necessary that every start point to end point there will be a bull cycle. There can be a bear cycle also, right? So we need to just understand the difference which is there. So that's why I just wanted to emphasize on this important thing. This comes on page number 78, which is, I'll just read it again. The most important thing is to begin right. For if we have the right beginning, we will get the right ending. So it is very important to know the start point, and then you'll be able to get the right ending also, right? So this was there. Let's go back to our theory, which was specifically talking about the master commodity course, where he has specifically mentioned about this 50% levels. Now what is been given about this 50% part, whether there is a rule or something like that which is trying to emphasize on. Let's try to see. So here we go to the page number which is there, and here we'll be finding rules for trading in commodities. So this comes at page number 9, and from page number 9 we go to the next page, which is page number 10. So in page number 10 there is a rule which is rule number 8. We have to read this rule. I'll probably just try to zoom this. Yes, that's it, right? So what does the rule say? This rule is for both buying and selling. So this is for the uptrend as well as downtrend. Both of them equally same kind of things can be applied. When prices decline 50% of the highest selling levels, you can buy with a stop loss order of 3 cents below the low price. Next strongest buying point is 50% between the extreme low and the extreme high. And after that, he talks about the examples, right? Now, one very important thing which we need to understand while reading and interpreting WD Gann is you need to understand what is the underlying meaning which is been given, right? So this is a big clue that I'm giving you across. You need to know that, and you need to understand what exactly WD Gann is trying to say us. I'll read the sentence again for you. He says, when prices decline 50% of the highest selling level, you can buy with a stop loss order of 3 cents below the low prices, right? So what is this and what is this highest selling point? Yes, right? Just understand the wording, the highest selling level. So when we come back on the chart, probably we have this low, we have this high, and then we have this reversal. So let's do one thing, rather probably first of all try to see on the bigger chart and then come to the smaller chart also. So assuming, yes, this is my entire chart as such specifically. So I will assume that this is my low. So my low levels are marked on this Fibonacci, which is there. Now see, we are talking about Fibonacci only for one simple thing, right? That is, we need to find out the ratios, and Fibonacci gives us various ratios together because WD Gann has been talking about those ratios together, right? We'll see them one by one, how things are there, right? So it is from 0, you go to level 1, and again you get a point which is exactly at 0.5. So what happens at 0.5? WD Gann says that, okay, this is my buying level. So what is that buying level and how does it come down to? Let's interpret that again. When prices decline 50% of the highest selling level. So what is this? This is my highest selling level, right? And if the prices decline from this, right? See, understand what has been given over here. This is the highest selling level. So this is the highest point, right? He's not talking about the buying point. He's talking about the highest selling level. From here, you can sell across. Yes. And from when it comes down to the 50% level, yes, you can buy from here with a very small stop loss, which he says as 3 cents, right? So 3 cents during that time, you can accordingly have a ratio for yourself for the low. right? So this is how he has given the interpretation for that, and again he has also given examples for that, right? So this is applicable for the selling levels, and this is applicable for the buying levels also, both of them together. Yes, the same thing is there, right? So he has very specifically mentioned about that this rule is for both buying and selling level, right? So this is on, as I told you, page number 10, right? So we'll go to one more page number which is very important, and again he has given the same things which are there, right? So here we come down to that page. Page number 54. So this is my page number 54, and yes, this is what is being given to us. He talks about the average or halfway point. What is the average or the halfway point? Halfway point is between the high and the low and coming down exactly to the 50% level which is there, right? So we know exactly the things, right? And we need to understand and interpret how things have been there. Always remember that the 50% reaction or halfway point of the range of fluctuations or of the extreme highest point of an option of any particular move is the most important point for support on the downside or for meeting selling and resistance on the way up, right? Now he's talking about one particular thing is extreme highest point, right? Halfway point, extreme highest point, which is being given. Yes, we have seen this wordings previously also. This is the balancing point because it divides the range of fluctuation into two equal parts, or divides the highest selling point into two equal parts, right? We have this wording which was there, highest selling point. Yes, we have seen this on the previous page number also, which was page number 10 as per my understanding, right? So yes, that things were been given over there also, and here also we see the same things which have been given, right? So I'll just read it again for you how things are there. Always remember that the 50% reaction or halfway point of the range of fluctuation or of the extreme highest point of an option of any particular move is the most important point for support on the downside or for meeting selling and resistance on the way up. This is the balancing point because it divides the range of fluctuation into two equal parts, or divides the highest selling point into two equal parts, right? Again, he's talking about the same thing, highest selling point. He is talking about the 50% reactions, right? So here at these two places, he has specifically mentioned about this 50% rule, which we need to understand. Let's go to the second book that we have in front of us. And the name of the book is 45 years in Wall Street, right? So let's try to go on this part also and try to understand where the details have been given. So that is page number 8, 6, 7, and page number 8, right? So this is page, this is rule number 3, buy and sell on percentages. So I'll just probably try to zoom this so that we have a clear picture, right? So this is there. Right. So this is rule number 3, buy and sell on percentages. Buy or sell on a 50% decline from any high level or a 50% advance from any low level. So long as these reactions or rallies are with the main trend, right? So if these are on the main trend, yes, definitely we can always buy at a decline which is there at 50%, or a 50% advance from any low level, right? So if it is advancing accordingly, yes, you can definitely buy as per Gann. But if it is in the main trend, if it is an uptrend, yes, definitely you can buy that. If it is in a downtrend, yes, you can definitely sell at those levels. You can use the percentage of the individual stocks as well as the percentage of the averages, right? Now, averages is more about two things. Dow Jones, previously during that time, that was also average which was being used, right? That is the one thing. And you can also use it for individual stocks also to determine the resistance level and buying and selling points, right? So again, he has talked about the same things over here. Further, let's try to see what he has given. you can use the 3 to 5%, next 10 to 12%, next 20 to 25%, 33 to 37%, 45 to 50%, 62 to 67%, 72 to 78%, and 85 to 87%. The most important resistance level are 50% and 100% and the proportionate parts of 100%, right? So what he talks about is the most important resistance levels are 50% and 100% and the proportionate parts of 100%. So again, he is trying to emphasize on this 50% details which are been given over here, right? So very important to understand what exactly things are there and how they are to be interpreted. Because until unless you are able to interpret these things, things may not be sounding easy for us, right? So let's go back on the chart and try to see which things which are there. Now, if I look from that point of view, right, I majorly get about two things which are there. Let's try to see those things one at a time. Yes. So if this is my chart, right? Yeah, perfect. This is what we wanted to have. So this is my low. Starting from 0, we had a high, and again we get a 50% reversal, which is there on my Fibonacci. So this becomes my first part, which is there. And again, from this low, if you have a high, and from there, if you see a reversal, this reversal on this part, right? So for example, if this is my low, this low has been considered as 0, and this is my high level. So 0 and 1, we get this 50% level where we get this second reversal. So these are cycles basically of what WD Gann has talked to us about, right? But what is the most important thing is this? The most important thing in this is to know only about one important part. That is, if we have the right beginning, right? Right beginning, we will get the right ending. So it is very important to know about this right beginning so that you are able to get this right endings also, right? So we had this 0, then 1, and we got a ratio which was again coming to the 50% level. And again, if we start from this level, yes, we had a high, and again we had a second ratio which has come down to the 50% level, as has been given in WD Gann's book, right? So is it that, okay, this have been formed in the smaller cycles only, smaller time frames only? No, it's not necessary and it's not that way, right? Let's try to interpret those things and try to understand how things have been happening. So if I consider from this day, let's say I am considering about the date range. So this is probably my low, right? And if I consider from this low to probably this low, which is there. So this has been happening somewhere around in a cycle time frame of 27 days, right? 27 days from this low to probably this low, which is there, right? So we got this time frame which is there of 27 days, approximately a month's time, right? But if you look at the bigger picture which is there, let's say this was point number 1, point number 2, point number 3, and then if you consider this as point number 1, probably point number 2, point number 3, and point number 4, right? So we have this point and this point, which is critical. We are considering from the start to the end, right? Again, if we look at the bigger time frame, right? So bigger time frame, we are getting a 50% reversal and then a second reversal after that. So where has that been happening and how that has been happening? Let's try to understand those parts also. So what we do is we have one more time frame which is there starting from this point. So this is my start point. And if we go to the end, which has come down exactly to the 50% level, which is there, yes, I have got somewhere around 189 days. That is more than 6 months of time period. So it is not that these cycles only do work in the shorter time frame. They also work in the bigger time frame. I am comparing about maybe 6 months and a month's time. Yes, these are two different cycles which WD Gann has been talking about. He's been talking about cycles within the cycles or wheels in the wheels, right? So these two concepts which are there together, of course, that is a single concept. Only the wordings are different. But yes, definitely there are smaller cycles, there are bigger cycles, right? Now you may ask, okay, fine, this may have happened luckily at one time. No, let me tell you. When the market has gone to this low level and after that the market had started coming up, right? We made a video which was there on 9th of July, 9th of November, where we told by end of November, right, the market would be coming to this level, which is maybe if I consider this as my high, the low part which came to the 50% part, and from there, yes, it should be coming down exactly to 18,888. You can go to the previous video. Of course, what we have talked about was in a private webinar to few of our students. Of course, these are paid classes, so we give them information which teach them how to learn across those things at an advanced level. Right. So definitely, if you want to join in, yes, definitely you can join us. Yes, we'll give the details, our coordinates also. So 9th of November, we told that by end of November, we would be able to see a high. Not only that, we also talked about one thing is after touching this level, this would also come down to a level which is 17,817. You can go back to the previous video and try to see this. We have already informed about those parts. And yes, those things did happen. Right. So as it is, things are there in front of us. Those dates are already there. We are not changing those dates as such specifically, and the things did happen. Right. So we need to just understand how things are there. Right. Now, this is the cycle which was there probably till end of December. Excuse me. And it started somewhere around on 17th. Yes, this is 17th of June. 17th of June till almost end of December. Yeah, this is there. So 17th of June is 2022 and December end is 2022. So is it that someone would be asking, probably this is probably a small coincidence which happened that, okay, this cycle was there and again this was there on the smaller cycle, then the bigger cycle? Yes, it may happen. Let me show you one more thing which is very clear and been happening in a very specific way. So what is that? Yes, we come down to a previous cycle which was there in the market. Yes. So we have this red line drawn over here. Let the chart take some time to zoom across. Yeah, better now. Huge variation, that's why. Now, let's say I start from this point, right? Let me remove this ratios, which we don't want, right? So we started from a low, right? We went to a high, we got a reversal, and from there, the market again did go up. So this was the first point, right? So what we did is we had probably one Fibonacci which was been marked. So this is by level 0 over here. And we have this high level, right? So this is my level 1, which has been marked over here. So we have this 0 over here on this, and this is my Fibonacci. So this is my start point. This is my end point. Start point is in terms of the 0 and 1, 0 and 1. So this is my 0 and this is my level 1. Yes. And if I check down exactly where the ratio came down for the reversal part, right? So this was just nearer to 0.5, right? So we got this first point and the second point, right? Now after that, WD Gann talks about, yes, from this, we'll again see a high, right? So from this part, let me remove this small Fibonacci. We don't want that, right? So if I consider this as my low, this is my high, yes, this has again come down to a very similar part, which is 50% ratio, right? That's why WD Gann has emphasized on this 50% ratios, which are very, very important. And yes, we do teach about that, right? But the most important thing for us to understand is one thing, right? So if we have and know the past cycles, we'll be able to know what is the right beginning point. And if you know the right beginning point, probably you'll also know about the right ending point. So very important to know these things, right? So as I told you, yes, we had a low, we had a high, we had this 50% level which was been coming down to, which was been given over here, right? So this is my 50% line. So this 50% reversal was there. From here, again, there was a high and again a reversal which came down to this 50% level, right? So this is not a coincidence. These are pure cycles which keep happening every now and then. Only thing is you need to know what is the right start point, right? And if you want to know more about this, probably you can just join into our webinars which are there. These are paid webinars, as I'm telling you again, right? We'll be able to tell you the details then, right? Now, the third and most important thing which we wanted to tell you at this stage, of course, we are covered this into a Hindi video which was been made a couple of days back, right? What we talked about, the third point was we had a high, right? So this high was there, and after that we got this one more high, right? So if you look at this second high which was there, this was been time happening, or probably was being made at a time frame which was 29 days, right? So starting from this high to probably this high, which is we are talking about, right? So this was a high, and after that the market didn't cross this high. So if we talk about maybe probably from this date to this date, let me draw a few vertical lines, easier to understand and know about. Try to broaden them, or maybe just darken them. Let me put down a good color, visible color. So I have this second line, right? So from this high to this high, we have 29 days, right? Now, as per Gann Emblem or maybe other theory, which is squaring of time and price, if we have a high to high, which is there of, let's say, 30 days, or maybe here it is 29 days, right? So we'll be getting a low after half of the time period of that, which here it comes down to exactly, let's say, 14 days. So this is 12, this is 13, and probably we have this 14th day, which would be coming up, right? Just a wild guess, not necessary that it should be exactly happening on the 14th day as such specifically. It can go up to the next day also, right? So if I say it may happen that this may happen somewhere around on this day also, right? And right? So probably it may happen that, okay, it may also take a support at the double bottom part, right? Not necessary that it should be going only on the bottom part, but yes, if we check as per the price that we are considering across, where it should be coming is, it should probably reach around this levels is what we think about, right? So yes, this is what we think that the market should be coming down to, more of like a reversal. And after that, yes, there will be a different cycle which will be starting. We are not talking about a cycle which can go high or maybe low, something like that. We'll talk about that probably in the coming video. But yes, at this stage, as we told you, yes, the high to high is 29 days. Yes, we are getting a low again, which is there after 14 days. So today is the 13th day, tomorrow can be the 14 days, and after that it can continue, right? We are not very precise about that part, or we are not talking that, okay, it would be happening on those specific days only, right? But yes, this is how we think that it should be continuing across on the coming days, right? Because the 15 days exactly, or maybe the 14 days, or maybe the 15 days which is there is again not exactly a working day. It comes to directly the 16th. So after 13th, it will be 14th, 15th is holiday. The next date is 16th, which has been coming down, right? So let's wait and watch, try to see how things have been happening. The second thing is, yes, we wanted to just quickly tell you that, okay, we have got a Telegram channel. The name of the Telegram channel is the Unit of Technical Analysis. Yes. And about the course, yes, we definitely keep on updating about the monthly course that we conduct, right? So here is the details which was been given about the course, which just recently started somewhere around, right? So this we just started on 6th of January, and this is our personal coordinates, which is there. Anyone wants to get in touch with us, definitely they can get in touch with us on this uh, individual personal coordinates, right? Or you can also be a part of this Unit of Technical Analysis Telegram channel, which is there. So you'll be able to talk about things to you also on those parts, right? So please do get in touch with us, and do wait for the next videos also. Okay. Thank you so much. Bye. Take care.